Ladies and gentlemen, good morning and welcome to the PACE Digitek H1 FY26 earnings conference call hosted by Go India Advisors. As a reminder, all participant lines will remain in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal the operator by pressing star, then zero on your touch-tone telephone. Please note that this conference is being recorded. I will now hand the conference over to Monali Jain from Go India Advisors for opening remarks. Thank you, and over to you, Monali.
Thank you, Ryan. Good morning, everyone, and welcome to PACE Digitek Limited first ever earnings call to discuss the Q2 and H1 FY26 results. We have the senior management of the company on call, Mr. Rajiv Madhisetti, Whole-Time Director, and Mr. Rajavendran P, Chief Financial Officer. We must remind you that the discussion on today's call may include certain forward-looking statements and must be therefore viewed in conjunction with the risks that the company faces. May I now request Mr. Rajiv to take us through the company's business outlook and financial highlights, subsequent to which we can open the floor for Q&A. Thank you, and over to you, sir.
Hi, good morning, everyone. First of all, thank you for joining in this call today. What I would like to do is I'll quickly take you through who we are and what we do, and then we can go on to the highlights of our H1 and especially in Q2, what all have happened, what are the new things that have happened, and in detail through the financials. So who we are. So at PACE Digitek is a company which started in 2007, and we are predominantly in the telecom and the energy industry, and we have a turnover of 2,439 crores in FY25, and we have a strong workforce of 1,500 plus people across India on roll and more than 1,500 off roll. We have three manufacturing facilities, two dedicated for the telecom industry and one for the energy industry, manufacturing battery energy storage systems. Over the years, if I have to go through the milestones of PACE, since we started in 2007, we started as a power management products manufacturing company for the telecom. And over the years, we have gotten into telecom services and telecom operational maintenance. These are the things which over the years we have developed and added in our portfolio. And as on today, we are an end-to-end telecom passive energy equipment manufacturer, service provider, and operational maintenance company. So we are an end-to-end turnkey project execution company in the telecom industry. And over the past few years, we have also gotten into the energy industry, where we do end-to-end EPC, solar, and battery solutions for the energy industry. Now, our business verticals include products, services, and projects. Products that we manufacture for the telecom industry, products for the energy industry like the battery energy storage systems, and few ICT products. In projects, we have taken up and we are executing telecom projects that includes tower and fiber. We are executing energy projects that include solar and solar plus battery energy storage systems and battery energy storage systems standalone. And we have also executed few ICT projects in the surveillance, public addressing systems, and in other forms. And in services, we do end-to-end product lifecycle management services and also telecom tower and fiber O&M services. Also battery energy storage system O&M services. So now, so this is a quick introduction of our company, since this is our first call to you guys. So we wanted to quickly take you through what is our company. So now the core strategy of our business is since the IPO, or what is our plan for this company, is that we have, as you all know, we have started the battery energy storage systems in a large way in the last 1.5 years, where we have invested a lot of time into developing the product and also winning a lot of projects in this space. And we are seeing a big growth in the coming years in the battery energy storage systems. Now, I wanted to quickly explain what we do in battery energy storage systems. We do three types of projects. One is the manufacturing and supply of the product itself for multiple customers. Two, we do EPC projects where we do the supply, erection, and execution of the project and handover of the project to the customer. Also, we do the asset-owned business where we build, own, operate the battery energy storage system project over a period of time. Now, quick highlights or the key highlights for our Q1 and Q2 of this financial year. We have won three major projects that include one project from SECI for battery energy storage system for 1,159 crores for 600 by 1,200 megawatt hour battery energy storage system supply and installation EPC project. We have also won O&M contract with the telecom company TTL, Tata Teleservices, for 185 crores for a period of 3 years. We've also recently won EPC project for solar with Mahagenco for a value of 920 crores. So with these projects coming in, our current order book of energy projects has come up to 5,869 crores, and also our telecom projects is at 3,266 crores. Going forward, we see our energy projects order book to increase by 8,000 to 10,000 crores before end of this financial year. So I'll hand over to our CFO, Rajavendran sir. He would give you some more highlights on our financial numbers.
Good morning, everyone. Rajavendran this side, CFO of PACE Digitek. So I would like to take over this call with the financial highlights of the H2 performance. H1 performance. So H1 we have a turnover of about 900 crores for the complete H1, and the second major point to note is that the PAT margin remains strong at about 13.61%. So the numbers are consolidated numbers. The EBITDA margin remained at 21% for this H1. The debt, that is the company's debt, overall debt stands at about 150 crores, and we have a debt equity ratio of about 0.11. Again, the company has a net worth of about 1,331 crores with a cash and FD balances of about 213 crores. So these are the key highlights numbers for the H1. Maybe I will also take you through H1 versus the H1 of the last year. So on the turnover, we are at about 900 crores the current year, versus the 1,188 crores of the previous year. On the PAT, we are about 122 crores of this year, versus 152 crores of the previous year. On the PAT margins, we are at about 13.61%, versus 12.79% of the previous year. So the turnover has come down compared to the last year. Majorly because of the reason that the last year we had a heavy supplies in place, the material supplies in place from our factory, whereas this financial year it is mostly concentrated towards the service portion. So that's the reason that there is a dip in the H1 turnover. But for the complete year, we are keeping the estimates intact, and mostly the seasonality nature of the business is there in all our in the EPC companies, which accounts for us. It is about 113% of the total for the year sales will be there in H1, and H2 accounts for 2/3 of the total sales. And this is the majorly seasonality nature of the business of the EPC contract. But the PAT margins are kept the intact. For the last financial year, we had about 11.44% of the overall PAT margin, versus the H1 PAT margin of 13.61%. And the next couple of things to talk about is that the PAT margins are specifically improved in this particular H1 because of the last milestones of one of the projects that we have, which enabled us to book 13.61 of the total PAT margin. And Next is the net worth of the company. So net worth, we have about 1,331 crores in as on 30th September, which is 1,209 crores on 31st of March 25. And moreover to note, the IPO funds are received on say till 30th September, and we have listed on 6th of October. So the IPO funds would be accounted in Q3. So the 30th September balance sheet P&L doesn't include the IPO funds. And finally, to note that the fixed asset has improved from say 178 crores in March 25 to 273 crores as on 30th September. So majorly two different things. One, the battery energy storage system plant, which is at Bangalore, it got commissioned and we have capitalized that particular plant. Second, the first project of battery energy storage system, which is from MSCDCL, which is again an object of the issue. There again, we have commissioned the first site and we have the further sites in progress. So there we have about 59 crores added to the overall fixed asset of the company. With this, we have this financial highlights completed. Then I will take you through the order book. So as Rajiv was explaining, we have a total order book of 9,135 crores. So with the bifurcation of energy and telecom. So this order book is expected to have a bigger revenue generation from Q4 of this financial year plus the next financial year. So FY26 we keep a guidance of about 2,600 to 2,700 crores at the top line guidance, with a PAT margin of about 11 to 12%. For FY27, which is next financial year, we keep a top line target of about 3,100 to 3,200 crores, with a PAT margin of again 11 to 12%. So which means the strong order book we have is getting converted to revenue mostly in the next financial year. Plus, we have a developer model of the projects, the energy projects. 4 projects which we have as on date is about 3,300 crores. This is expected to give an annual revenue of about 500 crores with a EBITDA margin of about 450 crores. So with this, the next financial year, this particular number is going to come from FY28, but from FY27 we'll have a portion of it coming to the P&L. So these are the financial guidance of the company, and I'll hand over to Raju to specify one of the expansion projects that we have.
Yeah, I also wanted to mention 2 key additions that have happened in Q2. We have started construction of our of the extension of our battery energy storage system facility, where as on today we have 5 gigawatt hour facility. We have started construction for another 5 gigawatt hour facility in the same premises. Also, we have as part of backward integration, we have also added a container fabrication unit, which will help us backward integrate and save us on costs for production of battery energy storage systems. Second key highlight I also wanted to mention was our first project for MSCDCL in battery energy storage systems. Like Rajavendran sir mentioned, on 26 September, we commissioned the first site, and we have taken target of executing 40 sites in this financial year, which is a big target, and we are very confident on achieving these. The overall target, there are 75 sites that need to be executed, of which we have targeted 40 sites to be of 20 megawatt hour each site executed by end of this financial year. So these are the 2 key things these are the few key things that have happened in this quarter and this first half of this financial year.
Yeah. So one more point to add is that we have 2 different major entities in terms of the top line contribution. The first is Space Digitek, second is the Lineage Power. So we have published the numbers of Space Digitek as a standalone and also as a consolidated basis. So the numbers I have stated is all consolidated numbers. So few more numbers to tell you people is this. One, the net worth of the net working capital of the company is slightly stretched because of the EPC nature of the business. One of specific project which we have undertaken for erection of towers is coming to the completion stage where the milestones are getting achieved. So due to which, one, we had a good margins in terms of the last milestones getting booked in the last quarter. So this particular project is getting completed in Q3 of this financial year. Further, say again, Q3 will have similar PAT margins, but again Q3, Q4 will see that the PAT margins will get stabilized at a for the year number of 11.5%. So the current number of 13.61 will get stabilized at 11.5% for the complete financial year. So this is something which I wanted to tell you. And finally, the net working capital, as I stated, it is a stretched thing, and it is expected to come down because now the project is getting completed. The last milestones are getting closed, and the retentions, whatever is available with the customers, is getting released. So this is expected to come down by 31st of March 26. So with this, we complete our say the explanations on the numbers and the business prospects. And finally, we thank all the stakeholders in relying on us and say investing in our company. And over to you for the question and answer session.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use their handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Diya Shah from Motilal Oswal Financial Services Limited. Please go ahead. Diya, if you can please unmute from your end and proceed with your question.
Hello.
Yes,
Hello.
please go ahead.
Hello everyone. So my first question was that, as you mentioned that we're doubling our BESS containerized capacity from 5 to 10 gigawatt, I wanted to ask who will be the major customers absorbing this capacity? Will it be the central government, the state discoms, or private companies?
So we have two categories. The projects that we are executing, which are EPC and developer projects, are usually state discoms or the central companies like the SECI or the NTPC. Whereas we also have private customers where we only manufacture and supply our equipment. Like I mentioned earlier, we also do the direct supply and we also do the projects. When it comes to projects, it is more of discoms and central government PSUs, whereas supplies would be to the private players.
Okay, got it. And another question will be, is there any strategic rationale to pick Kenya and Africa for market expansion? Is it because the untapped grid storage demand, or is it because of any policy tailwinds in those particular markets?
So, Kenya and Africa in the last few years have invested a lot in the telecom industry and have expanded a lot in the telecom industry. So we see a big need, and we've been working in the past few years, in expanding in the telecom side, providing our power equipments, doing the supply and installation of our power equipment and the hybrid solutions. We continue to see an opportunity going ahead.
Got it. Thank you so much. That is all from my side.
Thank you.
Thank you. We take the next question from the line of Manali Gala from Centra Advisors. Please go ahead.
Hello, everyone. So my first question is around the working capital requirements, like looking at the kind of orders that we are getting in. I'm trying to understand how are you all going to, how is your working capital going to be managed for such big orders? So that is the first question.
Yes. So to answer this, Rajendran this side. So as we explained, there are two. One is the asset-owned business, which is a developer model. So where it would be funded 30% by the equity contribution, 70% through the debt component. So the equity contribution would be all So if you seen the object of the issue, so out of the 820 crores of the IPO issue, 630 crores goes for one specific project. So beyond this, there are two more projects which is already signed off. There we would be putting our the balance of IPO funds, which is about 120 crores net of the issue expenses. Again, that would be used for the projects for the equity infusion. For the EPC orders and the supply orders, we would be using our own internal accruals with the LC limits in place. So this would be funded majorly through the internal accrual, two, the LC limits. Third, these EPC contracts and the supply contracts as a portion of advance, mobilization advance of about sometimes it ranges from 10% to 30%. So it would be funded majorly through these three sources.
Okay. Okay. Yeah. And when when we say that that you in the developer model you will make a 120 crore EBITDA. So yeah. I just want to know how is this number derived and what is the basis for this number?
Yeah. So when we say that this is for the next financial year, so out of the 3,300 crores of project, it's not that everything will get completed in this financial year. Something will get spilled over the next year also. So next year we expect about 175 crores of the overall revenue from this developer models, which is going to give us about 85% of the EBITDA. Means these are the developer assets, so the expense is only the O&M expenses.
Okay. Okay. Fair. And just one more last thing that so when now our facility 3, which went from 2.5 to 5, and now we are saying that this will move on further from 5 to 10. So what is the cost of capital? So what is the capital that is going in?
So the first 5 gigawatt hours, we have including the land, we have about 120 crores. The overall, excluding the land, it is 120. If I include land, it is about 200 crores of total capex. Plus the further expansion of another 5 gigawatt hours, we need to spend another 100 crores more because the fixed installations like the factory building is all common. So we would need one more the factory setup. So where we need to spend another 100 crores. Shop floor.
So we already have the land in place. So we are developing on the same in the same premises.
Okay.
So the expansion would be another 100 crores. Sorry.
So also while you were saying, when we say that we're moving this capacity upwards, how much % of your battery facility, which is facility number 2, will get how much utilization now we can expect basis on the facility 3 that is coming up?
So at this point, we have orders for more than 4.2 to 4.3 gigawatts. And by end of this financial year, we are expecting orders to cross beyond 6 to 7 gigawatt. And by the time the the third facility is ready, we are expecting to cross the 10 gigawatt hour number. So that will suffice for the full capacity of our construction.
Right. Okay. Thank you so much.
Thank you.
We take the next question from the line of Dipesh Sancheti from Shefali Art. Please go ahead.
Am I audible?
Yeah, you're audible.
Yeah, hi. What are current revenue contributions from each of your 3 verticals, that is telecom infrastructure, energy solutions, including the BESS and ICT? And how do you expect this mix to shift going forwards?
The energy segment is something which we have started, energy segment of the battery energy storage system specifically, we have just started recently. We have started going on ground from this Q2 of this financial year. We have set up the factory and which is again operational from June of this financial year. So till last year, we don't have this battery energy system. So other than that, the energy segment, we have other projects in hand. So last year, it contributed about 130 crores, for an overall turnover of about 2,438 crores. And this year, we expect this energy segment to touch about 500 to 550 crores for this financial year against a target of 2,600 crores. So now this 500 to 550 crores will include all battery energy storage system in terms of either the project or in terms of the product.
And solar.
Solar project.
And the rest of the revenues came from telecom.
Yes, telecom and ICT.
Okay. Okay.
ICT
And
contributes to a small portion of, say, about 200 to 250 crores. The remaining comes from pure telecom.
so when you say that FY26 you're targeting around 2,500, 2,600 crores, energy will be 500 to 550 crores and rest will be telecom.
Correct.
Yes.
How much of it will be ICT?
ICT about 250 crores.
250 crores. And what is the margin profile of all these, divisions?
So see, again, under telecom energy, we have again bifurcation of product and projects. So normally what happens is that the telecom products has a EBITDA margin of about 15 to 18%. The EPC has a margin of about 13 to 14%. And on the energy side, as we have started recently, the product margin is about 15%. EPC margin is about 10 to 12%. So that's the normal margin, like EBITDA margin that we have.
And how much of the sales actually came from service and maintenance?
So service and maintenance, say the last financial year, we were about, say what happens is that these service and maintenance goes as a part of project. Normally it is not shown separately. But if you wanted a specific number to it, last financial year, we have done about 120 crores of service and maintenance revenue.
This year,
120 crores. No, because you generally, now you got an order from Solar Energy Corporation also, where you have a 10 years of service and maintenance agreement. So how do you account for it? You account every year's revenues, right?
Yes, right. Every year's revenue is accounted as an annuity revenue.
So how much of it is the order book right now? How much we can expect that, these kind of revenues will be repeated over the next 3 to 4 years? I mean, if you can just tell me the order book.
Yeah. So standing today, the order book that we have for this annuity business is about 3,300 crores, which will give a overall top line of about 500 crores every year. And this is expected to grow up to, say, 1,000 crores in the upcoming years.
So you're saying that the energy business is around, the operation and maintenance is around 3,300 crores is the total order book?
Yes, correct.
Sorry,
Project.
to correct you there, so it is not just operational maintenance. The order book is of execution of the project plus operation and maintenance, but the revenue is annuity revenue. Once we finish the complete execution of the project, the annuity model starts, and we'll have almost 10 and a half years of annuity revenue of about 500 crores every year from the energy. Also from telecom, we have the O&M business of about 200 crores, 200 to 250 crores year on year.
200 to 250 crores. So the margin on these annuity contracts will be much higher, right?
Yes, right. So as I was stating in my explanation, so these annuity business, the revenue, the EBITDA margin is about 85%, 80 to 85%.
Okay. Okay. And so it's still the PAT you're saying that, you're going to get 500 crores plus 250 crores from the battery. So, from the energy as well as telecom. So that will be around 750 crores with a EBITDA of, 85%. Still you're quoting PAT as only 11 to 12%?
Yeah, because for the reason that these annuity model, where there is a fixed asset in place, it will go for a depreciation every year. Plus there will be interest component for the debt. So net the PAT margin will be kept at 11 to 12%.
Okay. So what will be the operating margin overall?
Overall in the sense, for the complete business together?
Yes.
So complete business.
Because you already told me 85% is your margin for these annuity contracts. That's right.
Correct. So the overall EBITDA margin will be about, say, 25%, 25 to 30%, wherein after the depreciation and the interest portion, it will be about 11% of PAT. And if you remove this annuity portion, the normal EBITDA margin for the other than the annuity model, we will be having about 18% to 20% of EBITDA.
Right. But I mean, when I'm seeing your financials, I don't see a lot of depreciation coming in around. I mean, it's around what, 6 crores every year.
Yeah, you're right. So as we stated that we have started going on ground in this Q2. So you will see a bigger depreciation in the next financial year. So this annuity revenue has not started flowing in this financial year. It will start flowing from the next financial year. Today we are starting this year, we are just executing the project.
Okay. So from the next financial year, that FY27, you'll get the annuity revenues, right?
Yes, yes. So as I was explaining,
But you will be depreciating it from the next quarter itself.
yes, we would be having a smaller portion from the next quarter, but for the next financial year, we would have about 150 to 175 crores from this annuity business. So with EBITDA margin of about 85%.
And how much would be the depreciation, if you can just, quantify that number?
So it will be mostly on the written down value method. So for a 3,300 crores worth of project, the depreciation every year will be about 200 to 250 crores. Not for the next year. It will be from FY28.
FY28. Okay. Interesting. Very interesting. Okay. Could you outline the manufacturing capacity of each of your three facilities along with the current utilization levels?
So, for the energy side, we have one facility now. On the previous question we had answered, it is one facility in which we have 2 units of 2.5 gigawatt, and the second facility is under construction, which will probably be commissioned by say end of next financial year, which will closer to end of next, maybe Q3 of next financial year, where we'll have another 5 gigawatt in place. So that will together.
This is in Kumbal Gadu, right?
Kumbal is our head office. Another 2 kilometers from here is a place called Bidadi, where our best manufacturing facility is there. In Kumbal we have our other 2 telecom manufacturing facilities where we do telecom products like the power products and the telecom battery products.
Right. And what is the current utilization level?
I request you to join back the queue.
So just if you can give me the current utilization level, that's it.
So current, like I said, for the telecom 2 facilities, we are using one for the PCS modules, which is catered to the battery energy storage systems, and the BESS facility is we have the order since we have more than the 5 gigawatts, so these will be manufactured. We have it at full capacity.
Full capacity. Great. I'll come in the queue. Thank you.
Thank you.
Thank you. Ladies and gentlemen, in the interest of time and fairness to others, we request you to restrict to 2 questions per participant and rejoin the question queue. We take the next question from the line of Paras Chera from Purple One Vertex Ventures. Please go ahead.
Thank you, sir, for this opportunity. Sir, just wanted to understand, our capacity on battery energy is being expanded from 5 gigawatt to 10 gigawatt hours. So, what is the capex amount and the commissioning date for this next 5 gigawatt hours? That is the first question, sir.
Yeah. So I think there was a question on this earlier. We had already mentioned we already own the land and the facility which is where the existing facility is there. So in the same land we are expanding. So the erection and implementation of the new 5 gigawatt would cost us about 100 crores.
Okay, and the commission date?
Yeah, we are Q3 or Q4 of next financial year.
Understood, sir. And once this 10 gigawatt hours comes in, sir, what kind of peak revenue can we expect it from that capacity overall?
It should be somewhere between 6,000 to 7,000 crores.
Right. And sir, just general blended, EBITDA margins on this, best business would be how much? In the region of?
Anywhere between 13 to 15%, sir. If it's only product supply, we would have a little higher. If it's a project execution, it will be around 13%. If it's a product, it will be 15 to 16%.
And your mix of product versus project would be, is there a sort of a target or it's still open as of now?
It will be more of projects. At this point, we have more project orders and lesser product orders. But we see product orders also to increase because, as the product performs in the field, we have better product orders coming in.
Right, sir. So, just last 2 questions. So, EBITDA margins on the product would be what, about 18%-20% or something, or 15%-16% versus 10%-12% on the project?
It will be about 15 to 18% the product margin.
So
Okay, and this one?
At this point, it is about 15 to 18%. We are trying to, further cut down on costs and do backward integration to increase this, because battery energy storage system business is a little demanding, and the margins are a little lesser at this point.
Thank you. We take the next question from the line of Rohan Varanwal from Aryan Capital. Please go ahead.
Your camera is working perfectly.
Hello, sir. Good afternoon. I wanted to ask 3 questions on the side of the order book. So, my question is on the SECI order of 1,159 crore. So, what is the timeline? Like in the report, we saw the timeline is around 11 months, of which 50% would be completed. So, what kind of capital deployment is done through the side of VGF, sir? Like VGF disbursement, and do we receive any grant upfront during the construction, or is it on an annuity payment basis, sir? And what kind of IRR do we receive from these orders, sir?
So maybe I'll slightly correct your understanding. The SECI order of 1,159 crores is a EPC contract, and with a maintenance. So the 1,159 crores, majority of the portion, about 1,020 crores comes during the commissioning phase of the first 1 year, and the balance comes for the O&M period. So this is the EPC contract majorly, and much of the revenues would be booked between the last, say, maybe March of this financial year and the next financial year.
So maximum by FY27.
And it's the working capital which we need to manage. As I stated, it has a portion of advance, and with the LC limits, with the internal approvals, we will be able to fund this project. There is no VGF for this project. This is a EPC project, so there is no VGF component.
Got it, sir. No. And sir, like for the other projects, like where you use the BEO build own operate model, so like MSEDCL, what kind of capital deployment do you use on that side, sir? And what is the annuity payment like post commissioning of it, and IRR on that side, sir?
Sir, it is like, say, these projects comes with a cost of about 1.25 to 1.3 crores per gigawatt hour, and it comes with a annuity revenue, say, which is a monthly payment per megawatt. It ranges, the contracts that we have, it ranges from 219,000 to 255,000 per month per megawatt. And this project comes with a VGF. The developer model of this comes with a VGF of about 27 lakhs per megawatt hour again. So these are the components, I would say, that if you want, I think I have answered your question. So the VGF is like, say, it would be paid in different installments, like say 10% is paid on advance, 45% is paid on commissioning of the plant, and the balance 45% is paid over a period of next to 3 years time.
Thank you. We take the next question from the line of Prerna Khandelwal from Analyum Capital. Please go ahead. Prerna, if you can please unmute your line and proceed with your question.
Hello, am I audible? Yes. Hello.
Your voice is a little feeble.
1 second. Hello, am I audible?
Yeah. Please go ahead.
Yeah, so I just had one question. Can you please provide me with revenue, PAT, and margin projections for the upcoming 3 years?
So we have given the outlook for the next financial year. Maybe in the next call we'll be able to give a guidance on the subsequent years. So on the order book that we have, this 5,869 and 3,266 of telecom. This is expected to have a say conversion to the revenue majorly in the next financial year and the subsequent financial year. So the next financial year, we are targeting about 3,100 crores of top line with a PAT margin of about 11 to 12%. And majority of this will come from the energy sector order book.
Okay. Thank you.
Yeah.
That's all from my side.
Thank you. We take the next question from the line of Erika Bisse from Chompy Enterprises. Please go ahead.
Hello, am I audible?
Yeah, please go ahead.
Okay. Thank you for taking my question. I just have one question regarding the battery energy storage systems market. How is the competition evolving in the domestic market, particularly with increasing participation from global players? Like, has the pricing environment become more aggressive, and how is PACE maintaining the pricing power and competitive advantage?
So, there is huge demand and huge competition that has started coming in over the last 2-3 months now, and there is a lot of infra and other type of companies coming in to bid for such projects. But as PACE, we have an advantage where we have the control of the product. Since we are product manufacturers and we have done the backward integration and we only have dependency of the cell and not the whole product by itself, we have an advantage. And we also have a cost advantage on these projects because since we are manufacturing the product and not just procuring and supplying and installing the product. So that's how we see it as an advantage.
Okay. Thank you. That's all from my side.
Thank you. We take the next question from the line of Manoj Reddy Sama from Zenwell. Please go ahead.
Hello, am I audible?
Yes, you are audible. Please go ahead.
So as per the DRHP, we have said that around 630 crores would be allocated towards CapEx. So can you update on how much of this has been used so far, and also a breakdown of this CapEx?
Yeah. So as I explained, first the IPO funds would be getting accounted in Q3 of this financial year. So we are listed on 6th of October, and from there 630 crores. Yes, we have not started spending completely, but this particular project for which this funding has been raised, that project, the first site is already commissioned, that is what we had told you. The first site out of the 75 sites got commissioned, and the balance, another it is expected that this project will get closed in August, September of next financial year, and majority of the sites will get completed in this financial year. So the first site is already commissioned, that is what we would say, and we have already spent about 150 crores, either from the debt sources or from the internal accruals for the project. The IPO funds, as it is received only in October, we are yet to spend from the IPO funds for this project.
Before the project closes by September, we should be able to.
Yes, correct.
The project capital, the 630 crores.
Okay. And now, with majority of our funds going to CapEx, so how will it impact our free cash flow for 2 to 3 years, and will the IPO funds be sufficient for our execution of projects?
So it's not that only this developer model of projects that we have. We have other EPC projects and the telecom projects with us, which is again adding up to the the net profits of the company, which will turn to a cash flow. And also we have the stronger net worth even before the IPO funds coming in. So as on 30th September, we have a net worth of about 1,300 crores before the IPO funds. So with these funds, we would have sufficient funds in place to take care of the projects. And the developer projects would be taken care via the equity portion, which is the IPO fund, plus the debt of say 70% of the projects would be funded through debt. And so this is how the funding would be managed for the projects.
Thank you. We take the next question from the line of Dinesh, who is an individual investor. Please go ahead.
Hello. Am I audible, sir?
Yes,
sir.
For the strong order book, sir. I have few questions. Like, आपने अभी बताया, can I speak in Hindi also?
Yeah, please.
Okay. आपने अभी बताया था आपका जो 3,400 करोड़ का बिल्ड ओन ऑपरेट वाला बिजनेस है, उससे कुछ 500 करोड़ का रेवेन्यू जनरेट होगा, आउट ऑफ विच 85% इज EBITDA. मतलब 15% की ऑपरेशनल कॉस्ट हो जाएगी, करेक्ट?
Yes.
तो और 200-250 करोड़ का डिप्रिसिएशन हो जाएगा।
Yes,
तो
correct.
अगर 500 का 85%, 425 minus 200 is again 225 करोड़, और 70-30 का इंटरेस्ट और इक्विटी का पोर्शन है, डेब्ट और इक्विटी का। तो 70% ऑफ 3,400 इज अराउंड 2,100 करोड़, 2,200 करोड़ रुपीज। उसका 9% विल बी अगेन 200 करोड़। तो अपना मार्जिन तो फिर जीरो हो गया था अल्टीमेटली आफ्टर डिप्रिसिएशन एंड इंटरेस्ट।
So the depreciation, as I stated, it was about 200 crores, and we expect the interest is another, say, 200 crores. So this 500 crores should give a PAT margin of about 50 crores. So that's the number, sir.
50 करोड़ रुपीज, ओके। सेकेंड सर, अपना जो प्रोडक्ट में मार्जिन है इट इज अराउंड 15% आप बता रहे हैं। तो उसके अंदर सेल प्राइस को अपन कैसे फैक्टर इन कर रहे हैं? मतलब उसके अंदर इंपोर्ट करना पड़ रहा होगा अभी तो इंडिया में सेल कम्प्लीटली। तो अगर इंपोर्ट सेल जो BESS में सेल लग रहे हैं, बैटरी के सेल, वो तो कम्प्लीटली इंपोर्ट हो रहे होंगे, इंडिया में मैन्युफैक्चरिंग सेल नहीं हो रहा है अभी।
Yes.
तो उसका प्राइस का अपन कैसे मिटिगेशन कर लेंगे सर?
Yeah, sir. So yes, 15 to 18% is the product margin that we have, and the product that we are trying to sell is the battery energy storage system in a containerized form. It's a containerized size of storage system. So the raw material for this storage system is the lithium-ion cells, which is getting imported. The lithium-ion cells, when it is getting imported, yes, what we do is that when we get some orders signed off, what we do is that back to back we go and sign off with the suppliers and freeze the prices. And we ensure that the price doesn't fluctuate. We are not affected by the price fluctuation in the, say, when the price moves from, say, $35 to $33 or the $32 or the $38, $40, we are not impacted with the price fluctuation. So we ensure that, and we book back to back with the suppliers. Plus, next point is that, sir, say this particular material, when it is getting imported by some other party who is doing this project as a complete finished product, which is a container, they need to pay a duty of about 20%. Whereas we import this cells, lithium-ion cells, at a customs duty of about 5%. So there is a clear arbitrage between the imports of two different components, where raw material versus the finished goods, where we have the, say, advantage of pricing.
Thank you. We take the next question from the line of Pankaj Bobade from Affluent Assets. Please go ahead.
Thanks for taking my question. I just wanted to know that, as you mentioned, we are importing the lithium-ion cells. Is there any plans to reduce this import content? And what is the import content at this moment? And are there any plans to reduce the same?
Oh, see, the containerized system is say based on the lithium-ion cells. So lithium-ion cells needs to be imported. And as I stated, what we are trying to do is that we are trying to stabilize the prices by say signing off back to back with the suppliers. And second point is that standing today, we have tie-up with 4 different companies in China for the supply, and all the 4 are all the 4 will come under top 10 of the cell manufacturers in China. So we already have a tie-up, and we don't foresee any specific risk in terms of the supply. And moreover, the value addition is done in India. We are doing the value addition only with the lithium-ion cells. So in terms of the supply, there is no major risk in terms of say getting the product delivered to the ultimate project.
So what is the import content?
So the import content is the cell alone, which would the battery cell alone will come to about 50 to 60% of the total cost. The remaining ancillaries are all manufactured in India, and we do the manufacturing and assembly here.
Okay, sir. Thank you.
Thank you. Ladies and gentlemen, in the interest of time, we request you to restrict to one question per participant. We take the next question from the line of Rahul Vashista from Aksa Capital. Please go ahead.
Yes. Hi, good morning. My first question was on this revenue part on the tariff. Earlier in the interview as well, you had mentioned the tariff is around 2.19 lakh for this MSDL project. Now, the variation comes over here from 2.19 lakh to 2.55 lakh. So how do we, judge what's the band and how does it vary while booking this revenue?
So it is based, it's a specific project. Say the MSDCL project is about 2,19,000 per month per megawatt. For say KPTCL project, it is about 2,49,900 rupees per megawatt per month. So when the project revenues are getting booked, yes, it will have a blended rate. Like say MSDCL project, we will be completing first. Maybe KPTCL project will complete by the end of the next financial year. So this would be coming on a blended and would booked as per the number of the revenue, the revenue which is signed off with the customer.
No, it varies from project to project, and it varies between the charge and discharge cycle also. The number of cycles that customer has, the cost or the month-on-month revenue varies between them.
Thank you. We take the next question from the line of Raj Mantri from Krijuna Research and Analytics. Please go ahead.
Hello, sir. Am I audible?
Yes, sir.
So, I wanted to understand this revenue recognition under the build on operate model under BESS. So, as per your DRSP, you mentioned your revenue would be 2,19,000 per megawatt per month. And for like MSEDCL project, for 750 megawatt, it translates to around 197 crore annually.
Right.
And your project was around 1851 crore.
Yes.
So based on this, the payback period appears too long and the frequency falls. So is my understanding correct or?
Sir, your numbers are correct, but the understanding I'll just slightly modify. You are right at the number of 197 crores, which is the annual revenue. The total cost of the project is 1,850 crores, which is including the GST portion. So you need to remove the GST portion because GST comes as the input tax credit. So net of GST is about 1,567 crores net of tax. And with that, we have a VGF component, which is a government grant coming for about 403 crores. So which will reduce the cost of the project from 1,567 to about 1,164 crores. So 1,164 crores is the net cost of this project, on which we are earning 197 crores as the annuity revenue.
Thank you. We take the next question from the line of Rohan Baranwal from Aryan Capital. Please go ahead.
Thank you very much, sir, for the opportunity. So my question was regarding on the telecom orders. So the BSNL 4G order book which we have, what is the current order book, sir? And as you previously expected to execute around 2,000 crore of order book in FY26. So how much of the remaining order book would be like remaining for the FY27, sir?
Sir, this 2,573 crores of order book of this BSNL 4G saturation, out of which about 1,400 crores will be booked in this year, and the balance of 1,200 crores will get spilled will be spilled over a period of next 4 years, 4.5 years, I would say, for the O&M portion.
Thank you. We take the next question from the line of Kaushal Sharma from Equinox Capital Venture Private Limited. Please go ahead.
Hi, sir. Am I audible?
Yes, sir.
That's very good morning, sir. So I have a question on your capex. Like we are currently having 5 gigawatt of capacity. So can you please tell me what kind of the capex we do require for 1 gigawatt for plant and machinery in a single shift, both in automated facility or non-automated facility?
Sir, so the plant has been designed for 3-shift operations, sir. So this 5 gigawatt hour facility where we own our own land. So excluding the land, we have spent about 120 crores of total capex for the 5 gigawatt of plant.
Thank you. We take the next question from the line of Manju Chaudhary from Aequios or Financial Service. Please go ahead.
Hello, everyone.
Just wanted to understand the units of what is the cost to set up the.
Manju, your audio is not clear.
Once again. Can you hear me now?
Yes, please go
Hello.
ahead.
Hi, everyone. So just wanted to understand the units of BESS. So what is the cost to set up the BESS system per megawatt, and what is the realization per megawatt? What will be the payback period for the BESS?
So, ma'am, it is, say, as I stated in the previous call answer, so we have put this 5 gigawatt hour plant at a capex of about 120 crores excluding the land. Point number one. This facility as a product, it is getting supplied directly to the customer, or it is used for the project. So for the project, in terms of the developer model, it is about 2 lakh 20 to 2 lakh 50,000 per megawatt per month is the revenue that we would generate. And for the EPC and the product supply, it is based on the cost plus margins which we negotiate with the customers.
Thank you. We take the next question from the line of Aniket, who is an individual investor. Please go ahead.
Hello, sir. Thanks for the opportunity. So I had a question on in terms of BESS in the market scenario. So basically, there are two markets, grid utility and CNI. So in the recent times, we have seen that the recent BESS tenders for Rajasthan and Gujarat were bidded for less than 2 lakhs per megawatt per month, so in the range of 1,70,000 around. So how do you see this competition going? How do you compete in this market with such low margins, and how do you protect your margins with this? And my second question, just the addition of this question, is in terms of CNI market. So we know that for BESS, it's more expensive than the diesel set. So how do you guys create value for the customer in CNI space?
So to your first question, see, there is a big they're going lower and lower in the numbers when they're bidding and winning the projects and the recent projects. But we see that numbers are closer to impossible, and because of which this will go through a correction over the next few months. And since, again, like I said, since we are manufacturing the product here, we know the lowest what we can go to, and we see that the numbers being stabilized in the coming months, and we are confident in that. Second thing, for the C&I use, we have the products ready for the C&I also for multiple customers, and we have started executing a few orders too. But to your question, the initial procurement cost of the BESS versus the diesel generator is higher, whereas the over the years, operating cost is operating plus the capital cost. If you see, it comes to be much better than the diesel generators.
Thank you. We take the next question from the line of Dipesh Sancheti from Shefali Art. Please go ahead.
Yeah, hi. In the Q2 presentation, you mentioned an estimate reduction in working capital, specifically related to the receivables for FY26. Now, could you share your current DSO, days sales outstanding, and the target level by the year end? And also outline the key steps being taken to achieve this reduction in working capital requirement.
Yeah, the first question is on I think the order book that you are talking about. So the order book is at about 9,135 crores for both energy and telecom put together. And I think the next question is on the working capital. So working capital, yes, I think what I would request you to see is the net working capital, which is inventory, debtors, less of creditor. So the net working capital, we have about 970 crores for this as on 30th September. So which is expected to go down because of the project nature that we have, the EPC projects, which is at the verge of completion. We all have the retention money for the projects, which is adding up to the receivables, which is expected to now come down. as the project is getting completed and retention money is getting released. So this number has to come down, say, by 31st of March 26. That is what we expect. And going forward with the energy business coming in, which is going to add up to the top line of the business, this number is expected to stabilize.
Thank you. Ladies and gentlemen, we take the last question from the line of Dinesh, who is an individual investor. Please go ahead.
हेलो सर ये इसके अंदर इम्पोर्ट ड्यूटी 11% है या 20% है BESS कंटेनराइज सोल्यूशन पे?
Sir, it is 20% for the complete product. The 10% whatever you're talking about is for the packs.
For the packs only. Okay. Okay. एंड सर इसके अंदर क्या चांसेस है जो जैसे 1.65 लाख 1.7 लाख रुपीस पर मेगावाट पर मंथ में हो रहे हैं, तो जैसे बीच में कोई JSW का केस हुआ था, उन्होंने 3-4 महीने में उनको CERC पे केस करना पड़ा कि गवर्नमेंट इज डिनाइंग व्हाटएवर दे हैव एक्सेप्टेड इन द बिड, तो कि अपना सब हो जाएगा बराबर सुरक्षित एग्जीक्यूशन.
We cannot speak for others. Our product is first site is already installed and running successfully the last 1.5-2 months now, and we have done the rigorous testing, and आगे जाके अभी next 4 महीने में almost 40 sites हो जाएंगे, and we will see the performance. We are pretty confident with the product.
Thank you. Ladies and gentlemen, we take that as the last question, and I now hand the conference over to the management for their closing comments.
Yeah. So we thank everyone for this for joining this call and putting your questions forward. Hope we have answered to your questions, and more importantly, as we stated, the business is growing in terms of energy segment too, in addition to the telecom sector, which is expected to say increase the top line and have the healthy bottom line also. And we had a great year in terms of booking orders in the energy segment, which is added up to our order book number. We expect this number to go up for the upcoming months till 31st of March 26. So maybe the next subsequent quarter, we'll be able to throw the numbers further. So with this, we end up the call. We thank all the stakeholders in relying us and investing in our company. Thank you.
Thank you. On behalf of Go India Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.